What's going on, guys? I hope all is well. This is Rico. I appreciate you guys watching this video. Hit that like button and subscribe to the channel. So I wanted to talk about how we should approach market crashes. And market crashes can be, very scary things. When you look at a market crash and the market is going down, you're seeing red, you're seeing all the companies going down, a lot of the companies going down, the big name companies going down, and you are looking at your portfolio and your portfolio is going down, and it could be a scary thing to see your portfolio at this level, and then when the market crashes and goes down, it's at this level, it's down. And I remember during the pandemic, we saw the market just tank essentially, and people were seeing their portfolio just going down and down, and that could be a scary thing for a lot of people. People who are retiring, in their retirement plans, 401k plans, you're seeing it in your individual plans, but it's an opportunity. We can have to look at it also on the flip side, that it's an opportunity as well. And when looking and researching and seeing the history of market crashes, the history is that market crashes always bounce back. It's always a temporary standpoint. If you zoom out on a chart and you look at the pandemic, you look at in the early 2000s, you see in the 90s, you see in the 80s, you see throughout the past century, you see that the market has always bounced back from a market crash. So it's very important to look at a market crash as a temporary thing. Something may happen as far as, a socio-economic situation. Sometimes the market just crashes because it's overheated. Sometimes there's something going on in the infrastructure of the market. So it could be a litany of reasons why the market just crashes and goes down. But you have to look at it from a standpoint of just, hey, over the past century, the market always bounces back. So the way we should look at those market crashes is opportunity. And that's where the wealthy really take advantage of market crashes, because things are on discount. And I always state that when we go to a retail store, we see discounts, we are happy, because obviously we are buying things on sale. And the same thing should be when we look at the stock market as well. When we look at the stock market and we see crashes, things are on discount. Because when you see a stock go down, say a S&P 500 company, like for example Apple, Microsoft, Amazon, and you see those companies go down during a crash, it doesn't mean that the company is bad fundamentally. It just means that it goes down with the market. And when the market crashes, it's good companies that go down. Also, companies that are not so good go down. A lot of companies that go down. But we have to look at it as an opportunity. So when those times happen, don't just run away and say, hey, I'm not going to invest anymore. But you have to zoom out and say, hey, the market always bounces back. The market always eventually gets its gains back and goes even higher. So my thing, or my goal when a market crashes always is to buy good companies. Buy good companies at discount. This is what the hedge funds do. This is what the big institutions do. This is what the great investors do, like the Warren Buffetts of the world. They always take advantage of these times because they know that in the long term, the market always bounces back. So always think about it from that standpoint. Think about it from a standpoint that this is only a temporary thing, and maybe it's an opportunity for me to be able to buy stocks at a discount that are on sale, knowing that the companies are still good, knowing that the fundamentals of the companies are still good, knowing that in 5 years, even maybe 2 years, it'll be even higher. In 5 years, it could be even higher. In 10 years, it'll be even higher. And Warren Buffett has a quote that states, if you're not willing to hold a company for 10 years, 5 to 10 years, don't buy that company. So when you buy a good company and you hold it 5 to 10 years and it's a really good company, you know, it's a great thing. You have a great chance of making great gains. You know, think about if you bought Apple 10 years ago. If you look at a chart of Apple, you'll see that the stock is way higher. If you look at Amazon, the stock is way higher than 10 years ago. If you look at Microsoft, the stock is way higher 10 years ago. If you look at all the great companies, they are way higher than 10 years ago. Tesla, 10 years ago, now is way higher. So when you see a market crash, don't run, but look at it as an opportunity. Have cash on hand and be able to buy companies at a great discount. This is how you really build wealth, is take advantage of those crashes and buy for the long term. And that's how you'll really be rewarded. So I just wanted to share it with you guys. I hope that was really helpful. Let me know in the comments how you guys approach market crashes, and let me know what things that you guys do. So definitely hit that like button, subscribe to the channel, and share this video with someone who needs to hear this message. I appreciate you guys, and I'll talk to you guys soon. Peace.